Get back with Paul Dietrich, CEO and Chief Investment Officer at Fairfax Global Markets. Great question. Good try by Donald there. Overall, though, the market is flat. Now, when you look at the overall rally that you're seeing in this index, in the US markets rather, Paul, JP Morgan's put out an interesting note overnight, which is basically calling it, well, saying that there is something wrong with the rally because of the split between the cyclicals, what we're seeing there, and a lot of weakness there, versus the defensives. And that's where we're seeing the strength, and that's what's pushing the rally up. Now, essentially, they're saying for this bull run to last, cyclicals have to take the lead in the rally. What is your view on what we're seeing on the markets and whether indeed this is the case?
I saw that report and read that report. It's probably accurate right now, but I do think that if we get the rate cuts, which seem that will be coming, I believe, in September, and we're seeing other central banks cutting rates, and if we get a trade deal before September, I think looking at the economy now, it is a little bit odd, but it's part of the reason it's odd is because so many things, political issues, are pushing down certain sectors in the country. So I think we're going to be talking about a completely different story in September if those things happen. You have to look at the economy. There's no question that the U.S. economy is slowing. I believe last year we had 3% growth. I believe we'll have about 2.4% growth. That's still good. During the last 4 years of the Obama administration, we had 2.2% growth, and we had a bull market. I wouldn't be panicking.
Paul, you talked about the Fed. So much of what we're seeing in the markets is hanging on these expectations that the Fed is going to move. Goldman Sachs has also put out a note, and I think this is really interesting in terms of investors out there in the US markets. They're saying if we get a full percentage point disappointment in terms of what the market is expecting versus what we get for the Fed, that would result in tightened financial conditions that could cost the market a 7% drop. What are your expectations from the Fed? Is it likely that we'll see a drop like this?
I don't think, if you're talking about the market dropping, I don't think that's going to happen if the Fed drops interest rates. I think you're going to see just the opposite. It's not going to be good for financials, and it's not going to be good for banks. So they're speaking from their self-interest. But a lot of us, including myself, thought that the last rate cut that the Fed made in December was a mistake. I mean, by law, the Federal Reserve is only supposed to raise rates if it's going to affect two things: unemployment and inflation. Well, we haven't even met the 2% target on inflation, and we got the best unemployment situation in 50 years. Why is the Federal Reserve raising rates? It's crazy. It's because the big banks want it because they make more money, and they're lobbying to get that done. But the fact of the matter is they shouldn't have raised it because it's not in their mandate. They made a mistake, and a lot of people have recognized that, and they need to cut rates at least by 25 basis points in September to get, for my position, to get back to break even. And then if there's a trade agreement, you won't need a second rate cut. But if there's not a trade agreement by September, I believe we'll see another one in December.
Okay, if there is, though, that's your base case, right? Both sides need a deal, both leaders, both big egos. They're going to agree to talk. They're going to agree not to extend the tariffs across to the balance, the rest of the $300 billion. Market's going to like that, and the Fed's not going to need to cut, you think?
Well, I don't think they're going to need to cut in December, but I do think that they need to rectify the mistake that they made in December, and we need a 25% basis cut in September. I think that will happen. There are an awful lot of people outside of the banking industry that would like to see that happen. It will be good for the markets.
Okay. All right, Paul, just before we let you go, top buy, very briefly.
I'm looking at two stocks that are going to be leaders in the 5G space. And you need to buy them now that they're cheap and hold them and be prepared to hold them for 2 years. And that's AT&T, which is selling for single-digit forward PEs, 6.2% dividend yield, and Apple. A lot of people aren't going to pay $1,000 to buy a 4G telephone when they know 5G is coming out next year. But think about it. After 5G is in the United States, in all the major cities, and every single person in the world who owns an Apple iPhone is going to have to replace it because all the apps are going to be different. Everything's going to be different. It's going to be the greatest retail sales of any company that they've ever had.
Yeah.
But you might have to wait a year or two. But
Yeah,
now's the time to buy it when it's cheap. Both of them are cheap.
That's a fair call. All right, Paul, we appreciate your time today. Thanks so much for coming to speak to us here on Street Signs.